Today, we will talk about deferred tax liability. A deferred tax liability is a listing on a company's balance sheet that records taxes that are owed but are not due to be paid until a future date. The liability is deferred due to a difference in timing between when the tax was accrued and when it is due to be paid. For example, it might reflect a taxable transaction such as an installment sale that took place on a certain date but the taxes will not be due until a later date. The deferred tax liability on a company balance sheet represents a future tax payment that the company is obligated to pay in the future. It is calculated as the company's anticipated tax rate times the difference between its taxable income and accounting earnings before taxes. Deferred tax liability is the amount of taxes a company has underpaid, which will be made up in the future. This doesn't mean that the company hasn't fulfilled its tax obligations. Rather, it recognizes a payment that is not yet due. For example, a company that earned net income for the year knows it will have to pay corporate income taxes. Because the tax liability applies to the current year, it must reflect an expense for the same period. But the tax will not actually be paid until the next calendar year. In order to rectify the accrual/cash timing difference, tax is recorded as a deferred tax liability. A common source of deferred tax liability is the difference in depreciation expense treatment by tax laws and accounting rules. Another common source is an installment sale. This is the revenue recognized when a company sells its products on credit to be paid off in equal amounts in the future. Deferred tax liability is a record of taxes that have been incurred but have not yet been paid. This line item on a company's balance sheet reserves money for a known future expense. A company might sell a piece of furniture for $1,000 plus a 20% sales tax, payable in monthly installments by the customer. The customer will pay this over 2 years. Here are 2 key takeaways. 1. A deferred tax liability represents an obligation to pay taxes in the future. 2. The obligation originates when a company or individual delays an event that would cause it to also recognize tax expenses in the current period. Hope this would help. Thanks for watching.